These are tech-savvy landlords who we're going to be speaking to during this panel. And I'm just going to dive right in. The first question I'll ask you is how real estate technology is changing the way you do your business as real estate landlords, starting at the end.
All right. Hi, my name is Steve Campbell. I'm with Prologis. I'm a partner in the corporate venture group, and I'm one of the old-timers with Prologis. I was with the predecessor company, A&B, and so we've been at this a long time, even before we set up the corporate venture group, and we've learned a lot in the course of doing that. I don't know how many of you are old enough to remember Webvan, but we were the real estate provider to Webvan. We've been involved in technology surrounding connectivity, a company called FatPipe. We were part of the founding group of Constellation. So we have a long history in this space, and more recently, the focus surrounding that has started to change the conversation that we're having with our customers in a very fundamental way. And I would say that's the biggest impact that we're seeing, is that rather than being transactional and negotiating leases with our customers, we're now having discussions surrounding how we can co-innovate and how we can collaborate on business process. And much of that is driven by a collective anxiety that is in the market now about change. And so the old school way of how we have typically done business is changing dramatically. And I would say that's the biggest sort of tidal wave happening, is we now speak differently with our customers, and we have very deep innovation partnerships.
Hi, my name is Kevin Danehy. I'm with Brookfield. So first of all, I just want to say thank you to CREtech for inviting Brookfield to speak today. The history with Brookfield around real estate in the last 15 years is, first we started to invest in other property types besides office buildings about 10 years ago. And over the last decade have been co-locating these different property types, high-rise multifamily office buildings, retail, hotels in particular, so that we could create a live, work, play ecosystem that we call placemaking. We've done this around the world to be responsive to the buyer values, if you will, of today's employee, which has all been operational in nature, is to activate our workplaces so that they appeal to the workforce, and as a result, we can charge a higher rent. What's happening today, and we think really started last year, was digital platforms, technology solutions have come to market that are practical for us to be able to create a digital platform for managing a process. And so a couple of examples of those are Honest Buildings that we use for managing capital projects, VTS that we use for managing the leasing process. We took 22 different accounting systems last year in North America and consolidated into Yardi. So we now have a single ERP. And what we're at the very beginning of doing is integrating these different digital platforms so that they can create a single, larger database. We think that data at scale is going to be a competitive advantage going into the future. So we're looking to be able to identify and adopt these digital platforms for different work processes, deploy them across our portfolios, and then integrate them so that we have a single place that we can store and analyze data. The second thing that we think is a game changer, particularly over the next 3 to 4 years, is using technology to create a relationship between the owner of the property and the employees of the tenants, so that we become much more focused on being customer-centric industry as it relates to the people who are either working in, shopping in, or visiting our assets.
To answer your question, I'm Ryan. I'm from EQ and Blackstone. I think for us, it's the transition to B2B, from B2B to B2C with all of our customers. And I think pivotal or kind of critical to that is understanding that the employees are the ones making the decisions in our customer base. It's not necessarily the CEO or the COO or the CFO anymore. It is actually the entire employee base, especially as customer retention and employee acquisition is kind of at an all-time high with the industry. Companies are making decisions based on what their employees want. And so for us, it's how do we access what exactly that employee actually wants. All these employees with all their digital tools are empowered to vote, empowered to make decisions. They can Google anything they want, and they're used to making decisions based on access to any information that they can think of. So how do we tap into that? As landlords, we focused a lot on our physical assets, so understanding the touch points with our customers, so making sure that we're training all of our security, all of our leasing, all of our operations people to really be pivotal in the journey, in the lives of all of our customers, but then have those kind of data touch points that really support that relationship so that we understand what our tenants, our customers, what their businesses are going through. So understanding, we have data, or we're trying to understand what do they like in the building, what are their commutes like, what is their move-in process, how can we help that whole life cycle of them, and then to maintain those touch points with the customers so that while we're collecting data, while we're understanding and they're volunteering data to us because we have such that relationship and we work so hard on that relationship, that then we can offer them insights to their business and say, these are who your competitors are. This is where the industry is going, and we can optimize your space, or we can help you to evolve your cycle to move into a flex product, or along those lines. So I think it's that kind of physical and digital connection, and being really in tune with how that enforces the relationship with the customer is really kind of where we see the value.
Hi, I'm Matt Boras at RXR. Just like the other organizations represented on stage have said, I think heightened attention to the customer through different methodologies, collection of data, using that data to create a better experience for the customer is a very important focus of ours. RXR also has been investing in technology over the years, so this concept isn't necessarily a new thing for the organization. I think observationally, one of the things that we're seeing, or I'm seeing, is just a complete shift in mindset from a landlord perspective, just viewing the asset differently, being able to monetize your asset in different ways, and frankly, being utilized as infrastructure for industries that maybe were once thought as being a little less obvious, things like transportation, logistics, and energy. So I think whether the business model is distributed hospitality concept or optimization of space in some one form or another, these are all things that we see as changes that are happening.
Great. So my name's Charlie Kuntz, and with Hines, I fully agree with all the comments that have been made thus far as it relates to building a better relationship with the individual occupants in the space, accumulating information to serve your customers better. Also, frankly, just give us more tools to be able to keep up with how quickly the lives and the businesses are of our customer, which we haven't really needed to do, I don't think, until relatively recently. And the one thing that I'll add to all that is that we have a distinct luxury of having seen so many other industries go through rapid change. And so that being the case, I think we have an idea as to what could occur that can be positive for incumbents and what can occur that can be negative for incumbents. And so what I've experienced, and you'll probably hear this a little bit more from the group here in a minute, with each of us here up on the panel, we've all gotten together and spoken very openly about what the challenges are, what we're trying to take on, companies that we're particularly interested in, companies that we're having a hard time understanding, trends that are changing. And so there's actually the competition is thought of a little bit differently than I think historically has been the case. And our ability to get together and kind of explore and try to understand what's happening and to share ideas has been fundamentally different than my experience in real estate up until the last couple of years.
Right, so there's clearly a focus on the customer. That's the common theme here. There are countless emerging real estate technology and data collection and analytic companies out there. When my firm posted our presence at this event, after that point in time, I think I received something like 5 to 10 emails a day from a new technology company wanting to get their name out there. So we heard in the earlier panel from the private equity panelists what they look into, how they vet the real estate technology companies and what drives their investment in one company versus the other. So how do you vet these companies? How do you determine this company or that or this service or that when implementing a technology into your building?
Sure, I'll take that first. So we've actually had a very steep learning curve. We formalized our corporate venture group a couple years ago and have gotten pretty surgical at what our focus verticals are. And part of the reason for that is we just don't have enough time and bandwidth to be anything less than focused. And so on the customer side of this dialogue, what we have done is started to listen carefully to the pain points our customers have. And I'll pick like the most boring pain point to give an example around, and it's labor. And so in most of our customers' space, when you talk to them about what they struggle with the most, it's finding labor and warehouse workers. And so we've gone about it very methodically to help incubate and now start to launch a solution for hourly labor and moving up the skill curve, warehouse workers, forklift drivers, things like that. And it's not very sexy, but it is speaking to an alignment between what we do as a landlord and what our customers do in their operations that has, again, changed the conversation. We really care about the quality of their labor pool. And we think about that an awful lot as we've now started to become more intimately aware of how bad the turnover issue is relative to hourly workers. So that's like a boring example of looking towards technology and trying to make a difference to align customer interest.
Any other thoughts on that question?
So up till 2016, most of the companies that were coming to us were principally focused on saving money at the margins of our business. And frankly, most of our operations people and our accounting and finance people were very good with traditional means of using Excel spreadsheets of performing most of these functions. Where Brookfield is most focused, I would say, is finding technology-based solutions that are going to replace a traditional process like leasing, like managing capital projects, like underwriting for investment deals that can be more efficiently performed using a technology that...
Not legal services, though.
Not legal services. Legal services are beyond reproach. But what we're like, Honest Buildings is an example. So we're a customer. We're also an investor. And what we found is that we can save 79% of the man hours that would have otherwise been invested in a traditional capital project by using this digital platform. Then historically it would, and we save 6.2% of the traditional cost versus the way we do it going forward. What another potential outcome of that is now is we have real live information about what capital costs are in the markets where we're using Honest Buildings as a platform. So when our investment professionals are looking to underwrite a new acquisition or refinancing of a building, they have instant access to real-time information about what it costs to do capital projects in buildings. So we're looking for real, tangible examples of where there's a commercial application for what these tools can provide.
Any other thoughts on the vetting process for these technology companies as you determine to implement them or not?
Sure, I'd be happy to add to that. I mean, from our perspective, I think very aligned in terms of trying to solve for impact maximization and cost or complexity minimization. And that can be applied to a lot of different areas of the business. Also, I think generally speaking, looking for companies that we view as serving as vital infrastructure or kind of the rails that will serve for tech and technology-enabled infrastructure going forward. So I think that's another way that we filter through.
The one other thing that I'll add to that is I think when you're identifying some of the items that Kevin was touching on as it relates to ways to really improve what you know and understand about how your business is operating and ways that you can improve that. There are oftentimes multiple competitors in that space. And a huge component for us, as I'm sure with everyone else up here, is the leadership team and the mentality towards working together. Because finding the right kind of tool is one thing, but figuring out a way to implement it across your whole portfolio is really where all the magic and all the pain and all the agony occurs. And finding the right team that you can really have confidence is dedicated to going through that brain damage together and getting out the other side is critical.
Just to finish that on that point as well, I think there's definitely a collaboration that has to happen within the company, right, in terms to kind of scale a technology. But I also think there's quite a bit of collaboration that happens within the industry. I think the real estate tech industry is still so small that, I don't think we're in it to crown kings or crown queens in technologies, but I do think there is value to, getting behind, a few good companies within a certain space, because the faster they can scale, the better the data is that we can all leverage. So I think that's one of the values that we have around kind of these events, and also kind of the roundtables and the workshops that we all kind of attend together to talk about, where are these companies going, who's ahead, who's behind, to kind of all come together and say, these are the ones that we really think we should invest in.
Is there a need that your company has for your operation of buildings, or your need to, or in furtherance of your pursuit of tenants for your buildings, that doesn't exist currently in the technology space that you would like to see emerge? I stumped you.
No, I'll take that one, because that's a great one. We would love, as I think a lot of owners would love, to understand utilization and how to, it's one thing to know how much of your space is leased. It's a completely different thing to understand how much of a given space in a market is being utilized. And so we would love and invite the emerging tech to help us solve for that. And we've been working with a lot of different companies on energy and energy management to provide one set of data points, inputs to helping us understand how much energy is being used in our buildings. But if I say there's one big holy grail, one thing that the tech world should help us figure out, that is what the true utilization is, so that we can be more predictive of demand and more thoughtful about how we deliver product to the market, so it's not off cycle, so it's more consistently deployed.
I would say that, consistent with some of the comments before, the industry has become more thoughtful, the real estate tech industry, about making sure that there's a real value proposition, so a communicated cost benefit to why the business model is a good one for us to use. So as I was mentioning before, as these different companies begin to work with us, and it's Brookfield, but it's also our peers, having an increased opportunity to aggregate data at scale, so that as we do that, in the spirit of Moneyball, what are the questions that we all should be asking, and how can we create value with this much larger pool of clean and real-time data? So how do we drive revenue? How do we drive increased NOI? And how do we increase asset portfolio value by having all of this information more instantaneously available and at scale?
Is that, what we're, I think, all beginning to talk about now, is that mean that there needs to be, a technology that arrives to help all of that integration occur, or that we need to be stepping in and making sure that that's all kind of happening on a company-by-company basis?
And how are you tracking, if you're tracking at all, the ROI on these technology services? Is there a way to do that? Are you actually doing that?
So we have a process. In order to get approval for an investment, we obviously need to have a strategic business case. But in order to get traction to deploy beyond the pilot stage within Prologis, we have to be able to demonstrate a meaningful return on that overall investment. And that's tough when something is evolutionary. And so we've tried to separate procedurally how we go about engaging stakeholders internally to test the water, to kind of put one foot in the pool at a time and come up with a set of stakeholders that then can help develop a meaningful ROI.
It's real estate holiday party season, which means everyone's talking about the state of the market. And the general sentiment is we're near the end of a cycle. It's been 8 years of growth since the downturn. How is the state of the market impacting your investment in real estate technology, your implementation of it in your businesses? Is your investment in real estate technology kind of independent of the market? Any thoughts on that?
So I would say that we remain very, very disciplined about making sure that every particularly new tool, every digital platform that's adopted has a compelling cost-benefit justification for why it's being used. And we're going through a very thorough assessment of the end-user engagement platforms, the digital tools that we can use to deliver services and convenience and communications to the employees of our tenants. But what we're looking really hard at, very hard at, is to see how we can also create a revenue stream along with the cost, because this is an incremental new cost for something that has not existed before. With us, understanding that I've had the good fortune of living through 4 different economic down cycles, and so it's not a question of if, it's a question of when, and we want to make sure that the energy, the time, the resources that we've invested in adopting these new tools and platforms isn't seen as the first line item to be cut, next year, the year after, as the economy starts to slow down.
We've got some fans in the audience. Any other thoughts on that topic?
Yeah, I think I would just echo those sentiments. I think we're using technology or looking at technology that'll help save money at the property level operationally or make us more operationally efficient. Also looking at generating new revenue streams as it relates to our existing portfolios or coming up with creative business plans, creative capital solutions that may allow us to participate in a market that otherwise is challenging, looking at it in a traditional sense. I think affordability becomes an issue at this point in the cycle too, especially as it relates to areas such as, housing. So I think those groups that are thinking creatively or using technology to solve a real, societal problem that relates back to real estate is of interest to us.
I'll just add to that. I think I would say we're fairly bullish on investing in technology, even given a downturn. I think it depends on where that technology fits within. I think if during a downturn, if it's gonna become a commodity race and it's based on if we start trading on cost, I think the investment in technology will still be a differentiator if it does add that incremental value. I also think if when downturn, for us it'll mean that we'll be beginning to invest in new properties, right? Just because of the way that we're positioned. And so for us, seeing that on the horizon, we're investing a lot more in external data that allows us to understand, what is the next neighborhood, what is the next region, where are people going, where are people moving, where are people buying houses, to say, is Oakland done, or is Oakland still hot, or is Boise, Idaho the next tech mecca? Those are the kind of tech investments that I think are going to drive through the downturn.
A promising theme in these answers that even in a downturn, cost-effective technology is going to be invested in, and it will make sense, and it might even drive opportunistic investment. So any further thoughts from these panelists? No, we covered it all? Okay. Round of applause, please, for these panelists.